The COL Strategic Growth Equity Fund is a Philippine peso denominated fund that aims to generate long-term capital growth for its client through active portfolio management. So the fund is primarily invested in common stocks that are listed in the Philippine Stock Exchange with the goal of outperforming its benchmark, which also happens to also be the PSEI over the long term. The philosophy we have behind the CSG is the FTSR framework. So that stands for fundamentals, technicals, sentiment, and risk. We take all of these factors into consideration when designing portfolios. And we believe that by adopting a holistic approach, we can outperform over the long term. So being your fund managers, we do the buying and selling for you. We choose stocks which we think will outperform over the long term. We take responsibility in terms of when to sell these stocks so that we could help generate a good return for you in the future. So at least by entrusting your money with us, you could do whatever you want, eat, work, sleep, play while we're watching the market. So wala ka nang iisipin. So we actively buy, we actively take profits, we size positions for you, we take into consideration portfolio allocation so that you don't have to think of anything else. What makes the CSG fund unique from other equity funds in the market is the fact that it endeavors to be all-weather. So when we say all-weather, our goal here really is to be able to make the fund perform or do well even if we're seeing either bullish or bearish conditions. When we notice that the market is about to turn, we sell out of equities and we try to invest in other asset classes such as fixed income so that the fund could continue to generate earnings or yield even if the stock market is falling. Like let's say 2013 onwards, there's a cyclicality to it. Right? It goes up, then it goes down, it goes up, and it goes down. So if you're just riding fully invested the whole time in the Philippine market, whatever you're earning from year 1, sinusoli mo din pag bumalik on year 2. So what this fund tries to do is when we're able to ascertain or determine that the market is in a toppish condition, we will try to sell or at least sell a huge portion of our equity positions and then transfer to another asset class such as fixed income so that we sidestep the decline in the equity market while at the same time try to generate interest income from the fixed income investments. So we feel it is in that way that we might be able to really deliver an outperformance over the long term. It's the ability to go 100% cash. So when we really sense that there is danger in the market, we will try to raise our cash allocation to as high as we can, so as the market falls, we're not there. So to invest in the CSG, we have an asset management charge of 1.5% per annum. So I'm glad to report that if you at least check across the industry, that's actually one of the lowest that's being charged for actively managed funds. And I think one of the key differentiating factors in terms of our cost and charge structure is that we actually don't have any lockup fees and we don't have any early redemption charges. So if you're a client, you read about this product, it's interesting to you, you could actually buy it. If you're not happy with the way it moves, after 5 days of buying it, you can sell it at no extra charge to you. And this is also different in stocks in the sense that there's no commission charge as well. So if you buy the fund, there's no charge. It's just that we as the fund managers are charging out of the NAV, the asset management fee, 1.5% per annum. But that's practically it. And then the minimum initial investment is 500 pesos. And then the minimum additional subscription is also 100 pesos. So it's actually very low. This fund is actually suitable for any investor who wants to build wealth over the long term, but is able to accept the volatilities of the market. So even though we say we endeavor to be all-weather and be able to manage the fund through any condition, what clients need to expect is that this is still an equity fund. And equities are inherently a volatile asset class, meaning people who want to go into this investment should be able to tolerate the possibility of swings in their capital and the potential for the potential for loss. It's just the reality of investing. But of course, we as your fund managers will do our best to mitigate that. And people who also go into this fund should be ready for the possibility or the risk of underperformance. So since we are managing risk for you, sometimes when we're seeing the market go up already, we will be taking profits along the way as it's going up to hedge against the possibility of returning these same profits when the market turns. So there's a possibility at a certain point in time in the future, let's say the PSE index is doing 24%, the fund may be doing 22% or 21% because we already took profits along the way as it's going up. In the same vein, as the market is rounding out of the bottom, it's possible that we might not also catch, like let's say the equity market at its absolute lows, because it will also take time for us to shift in terms of our mindset to position from, let's say, fixed income back into equities, because we need the move to prove itself. When the market is very good, it's possible we might underperform a little, but at the same time, if the market falls, we're also going to be protected because, those are the strategies we just inherently implement. So clients who come into this fund should be prepared that there could be volatility, but given the way we manage it, we will try to really compound wealth over the long term. So we could buy this fund through the COL Fund Source platform. You just type in your COL credentials, you go to the mutual fund tab, go to order entry, and then you type X COL CSG, and then you follow the prompts thereafter.